Hi, I'm Lynn Fox. I'm the president of Scarecrow Trading. Thanks for clicking. Don't worry, this is not a 250 slide presentation that tells you nothing in the end. It's about 10 slides to tell you what you need to know to determine if you're interested in pursuing using this strategy to be part of your IRA portfolio. In the interest of full disclosure, do know that that good-looking guy to the left is not me. I'm just not that good-looking. I'm in my 60s, I have very little hair, and what I have left is gray. Now, gray hair, that's a good thing for you, because it took me that long to develop the solution I'm going to show you, along with creating a 10-year verified track record. It's not backtesting, not hypothetical, but 10 plus years of actual trading. Few advisors have a track record to show you, let alone 10 years. At Scarecrow Trading, we trade mutual funds, specifically market index funds. We buy regular index funds, leveraged index funds, and inverse index funds. We are a market timing research company. We determine when to be in the market, when to be out of the market, and what index to be in, and what direction it's going, as in up or down. Scarecrow Trading is a C corporation. We're based in Savage, Minnesota. We provide market timing signals to the finance industry. The signals are used by investment advisors to assist them in managing the equity portions of their clients' portfolios. So why would you want to use Scarecrow Trading signals? Well, first, to improve performance of your portfolio. The mutual fund returns over time average between 8 and 10% a year, and that is provided you buy them and hold them for quite a long time. At Scarecrow Trading, our timing systems do much better than that. Your advisor will talk about diversity, and it's important to diversify your assets. We at Scarecrow Trading think it's as important to diversify your manager. We think it's also important that if you do diversify management, that the second manager do something different than the one you already have. A small segment of the investment advisory community uses a method called active management. Scarecrow Trading is part of that community. Rather than set up a diversified portfolio and tell your client, see you next year, active managers continually monitor clients' market positions to determine if their positions need to be changed based on current market conditions. And some of those managers hire Scarecrow Trading to provide them market intelligence to support those changes. We specialize in providing tools for the equity portions of their clients' portfolios. At Scarecrow Trading, we update every single day. Think about that for a second. When was the last time your financial advisor got up every morning and, using the latest market information, determined what your account should be invested in to be safe and also make the most money for you tomorrow? And does this every single day. If you get up every day and go to work and produce something for your employer, shouldn't your advisor be doing the same thing for you? Instead, the trend seems to be quite the opposite. Do less and do it less often. I mean, the trend is going towards something called a robo-advisor. If you're not adding value to the relationship, a robot can look pretty darn attractive. Third-party ranking. There are lots of people out there with great track records that really aren't track records at all. If you can't verify a record through a third party, it's not really a record. Theta Research is one of the firms that tracks our systems. In the upper right is the snapshot from their website. The lower part of the slide is an enlargement so you can see the company names. So this is the snapshot that was taken October 31st, 2015 of their rankings. Scarecrow Trading holds the 1 year, the 2 year, the 7 year, and the 10-year top positions at Theta Research. Now this can fluctuate over time. Scarecrow Trading consistently holds top positions in the various time frames for performance on Theta Research site. Theta Research reports all performance net a 2.5% fee. So clients whose accounts are traded exactly as we trade the tracking accounts experience these kind of returns. You can subscribe to Theta Research and view them yourself, or you can send me an email. My address will be available at the end of the presentation, and request a guest pass for free. The guest pass will let you go in and see Scarecrow Trading System statistics for a limited period of time. Another site that monitors us is Money Manager Review, and this is their 10-year ranking. Scarecrow Trading holds the number 2 position and the number 6 position. Okay, let's talk about rolling periods. Let me turn my pointer on here. Turn the laser on. There we go. All right, let's do an explanation first of what rolling periods are and how they're built. We'll talk about a 3-month rolling period. We'll look at the period here between January to June. As we acquire the first 3 months through March, that's our first 3-month rolling period that we take count of. As we roll forward into April, we then have February, March, and April. That's our second 3-month period. As we roll forward to May, there's our third 3-month period. As we roll forward to June, that's our fourth 3-month period. That gives us 4 periods to measure and calculate statistics from. Yep, the laser's on. Okay, this is where we're going to focus here. We're going to talk about the rolling statistics in the S&P 500 and Crow Chaser. We're going to walk through the historical performance over the same time periods, measuring the S&P 500 and Crow Chaser. The S&P 500 would be analogous to a buy and hold approach versus an active manage approach like Crow Chaser. Crow Chaser is here in the white. The S&P 500 is in the gray. Crow Chaser began tracking in July of 2005. So these statistics were derived from that time period, July 2005 forward, and it was either October or November period that I pulled the statistics from. The Crow Chaser numbers come from Theta Research, and I had a tool that calculated them for the S&P 500. So here's our rolling periods that we just discussed. We have 122 3-month rolling periods that are derived from that 10-year history, 106 1-year, and so on, going across here all the way to 58 5-year records to analyze. We're going to look at average period loss, worst performance, number of periods profitable, and the average period gain. Let's start over here at the number of periods profitable. You can see right here that we look at the 69-70% range. This means that 69% of the 122 periods had a profit, meaning that 31% did not. The number is exactly the same for the S&P as it is for Crow Chaser. Still in that same 70% range as you look at the 1-year period. But things begin to change when you hit the 2-year period. Crow Chaser comes in at 93% profitable periods, and the S&P 500 is still struggling around the 70%. And even worse, if you look going across, it begins to actually deteriorate and drop into the 62%, 58% of the periods profitable, and 66% when you reach the 5-year. Where Crow Chaser maintains that 90% and continues to improve, where in the 4-year period there are 70 periods measured, and Crow Chaser has 100% of those periods were profitable. So let's go up and look at what happens when they aren't profitable. This is the average period loss for the periods that weren't profitable. Crow Chaser comes in at -11 on the 3-month. S&P comes in at -7. S&P has a slight edge. That edge is lost quickly. Crow Chaser maintains at 11 through the 1- and 2-year periods, where the S&P 500 or buy and hold is getting even worse, 19 and 25, up into the 2-year period. -21%. Crow Chaser continues to improve at a -6 and gets to 0 period losses for Crow Chaser versus a -13 and a -8. When you look at the worst performances, this is telling us that one of these 122 periods, at least one of them, had a -35% loss. And this is saying a -30% for the S&P. Crow Chaser continues the same pattern of improvement over time of the worst performance. And we see, again, the similar pattern for the S&P 500. It deteriorates and gets even worse over time before it ever gets better. And when you get into the 4-year period, Crow Chaser's loss is actually a 55% gain. That's its worst performance in the 4-year category, and its worst performance in the 5 years is a 72% gain. While there's still periods of time on the S&P 500 of losses as high as a minus 15% and as high as a minus 26% for the S&P. Now we drop down here and we look at the average period gain. Here we have 6% average period gain in the 3-month with an average of 13. Crow Chaser is at least double or more so as it goes out here. Here it's more than double, 15 versus 39 in the 1-year category. And look over here at the 3-year category. This is interesting. 112% average return historically for Crow Chaser in the 3-year category. That means that Crow Chaser literally doubled the account on the 3-year time frame versus the S&P still at a 44% gain. That's an amazing number. You can see from the history now that within the 3 and 4-year time frame, Crow Chaser begins to deliver a substantial advantage. My most successful clients make a personal commitment to stay with the system for 3 to 4 years, remaining aware of the history of losses as well as gains. I suggest you consider that before you sign up for this program. Take some time, look at the buy and hold history. You can pause this program and look at the slide. I personally find buy and hold risky. Some of us are too old for buy and hold, and that includes me. It's more of a young man's game, in my opinion. All right, this gives you something to think about. You won't hear about services like this from the average advisor. That's because the average advisor can't do this. We're specialists. We time index funds. We don't trade bonds. We don't do sector rotation. We don't do asset allocation. We time index funds, and we've been doing it for 13 years very successfully. We suggest you use an IRA for this, and we suggest you structure it as a separately managed account. And you establish that at Guggenheim Investments if you want to use our services. Separately managed accounts mean you own it, you open it, and only you can touch the funds. Management is authorized to only trade and bill the account fees. I work closely with an advisory firm, and the accounts managed by them are traded and billed exactly the same as the tracking account that generates the statistics used in this presentation. I showed you rolling returns because I wanted you to understand that historical performance is important. I want you to see why I suggest you take and make a commitment to stay with this for 3 to 4 years. There is no lockup like with hedge funds. It's your money, and you can quit the program anytime. Disclosures. I'm not going to read these to you. Request a copy of the slides and you can review them at your leisure. Here's my contact information. You can send me an email if you're interested, and I'll put you in contact with an advisory firm that uses Crow Chaser. You can send me an email for a copy of the slides you saw today, or you can email me if you want to get a guest pass to Theta Research, or if I can also send out a fact sheet with the monthly returns. And of course, you can email me with any questions. Thank you for your time today. I appreciate it, and I hope to hear from you.